A growing number of stock market commentators are arguing that a big recovery for Alphabet, Nasdaq GOOG, and GOOGL will happen in 2023. Yet, while at first glance GOOG stock may seemingly have many of the ingredients in place to make such a comeback, it's far from a given. Today we will look at the Google stock in 2023. 4. Google stock forecast, technical analysis. GOOG is trading over 40% lower than its 52-week high price, which was $152.10. Currently, GOOG is slightly above the 52-week low price of $83.45. GOOG stock has been trading below $90 for the last few days. The $90 has been a critical resistance for GOOG, and the price has failed to rise above this resistance. GOOG is marginally bullish, but the stock price has been constantly trading below the 50-day as well as 200-day MA. To trigger a bullish run, GOOG will have to break above the 50-day MA, which was around $92.04. The first level of support for GOOG is $86.24. Currently, GOOG is bullish as more buyers have entered the market. The RSI for GOOG is 45.06 and is moving toward the overbought territory. There's enough space for the RSI to rise higher before it enters the overbought territory. Current earnings forecasts for GOOG stock call for a moderate rebound in the FAANG component's earnings over the next year. Per analyst census, Alphabet's earnings per share, or EPS, is expected to climb back to $5.27 in 2023. Before proceeding further, please subscribe to the channel and click on the notification icon so you can get notified when we upload the next video. 3. Factors to look out for in 2023. Advertising revenues. Advertising is at the core of all Google revenues, which in turn makes it a safe investment till the time this monopoly is untouched. Google has struggled this year as firms are cutting down on advertising spending in this uncertain environment. With the continuously rising interest rates, we are likely to see even softer ad demand in the coming future. Google Cloud. Since other major cloud providers like Microsoft and Amazon faltered in the most recent quarter, Google Cloud's strong momentum demonstrates the company is moving in the right direction. Search engines being replaced by mobile applications. The majority of Google's ad revenue is produced through conventional search engines or the old-fashioned web browser. Android OS. Although it can compete, Google does not have the same lopsided edge against Apple and Facebook as it did over Yahoo or Bing. If Google cannot generate additional sources of revenue, stockholders will soon feel this stress. 2. Google stock forecast, valuations. Google has the highest PS ratio of 4x when compared to Meta Platforms and Amazon, which are both search titans in their own right. Currently, Google is at a PE of 19.3 with an EPS of 4.7, which translates to a price of $91 as compared to where Google is right now, i.e. $98. Google is also anticipated to produce $5.43 in EPS during the fiscal year 2023, translating to a PE ratio of 17.7x. Depending on how harsh the upcoming recession can be, Google's earnings are at risk. Due to those factors, Google stock may see short-term pressure and retest its most recent low of $83.45. Investors will be willing to pay a 13 to 14x PE ratio for GOOG, which translates to a price range of $70 to $76, which is when the advertising demands would bottom out. This means that Google revenues will be at their lowest and the stock will be undervalued then, and hence would be a great buy. 1. Conclusion. The company will have to maintain strong fundamentals in this environment and invest in artificial intelligence and machine learning skills so as to continue to maintain the finest position in the internet industry. This brings us to the point that Google will be at its best price on the day when the advertising demands in the globe bottom out, which will directly imply Google revenues bottoming out. This will bring out the best value of Google for investors. Right now, platforms like Meta, TikTok, and Twitch are gathering a lot of consumers' attention, which might bring a shift in where the advertising market will go in the coming future if Google remains stringent in bringing any improvisation in its own platform. Although GOOG may look like deep value on a stock screener, value trap may be a more accurate descriptor for the stock at present. Given the current macro conditions, there's a good chance shares continue to trade sideways for most of 2023. Even if the company manages to meet or beat expectations, this may not result in a massive boost higher. Rather than surging 20%, 30%, or even more, best case scenario, shares may only make a return to prices barely at triple-digit levels. What are your thoughts about this stock? Do let us know in the comments. Also, if you enjoyed watching the video, please hit the like button and subscribe to the channel for more videos like these. Thanks for watching.